let's get to Bob Pisani, get a little more focus on the broader market here and what we're seeing. Good morning, Bob.
Good morning, David. Good to see you as always. Good to see you, Jim. It's been a very difficult morning for the green shoots crowd. Last night, with the close we had, the green shoots crowd were all over the place. Oh, have you noticed? We're 20% off the high. We got out of a bear market in 12 days, 13 days. The dollar is off its highs. We've had reports of corporate insider buying. The green shoots crowd was screaming, oh, the bottom is in. And of course, you see that's not happening. And the reason it's not going to happen is the intraday volatility is titanic in the stock market. And that's what the cue you should look for. So look again today at the sectors and what's going on. It's gone back to where it was on Monday, essentially. So the stuff that's not that's underperforming, energy stocks, of course, bank stocks, technology stocks somewhat, and consumer staples are down less. This is a pattern we saw many times on the down days, and that's what's happening today. If you take a look at some of the other things, companies withdrawing guidance, the list keeps growing. We keep this list here at CNBC. It's getting close to 30, but we have Gap, we had KB Home, we had EssilorLuxottica. They make Ray-Ban. They trade over in Paris. They withdrew their guidance as well. Macerate, one of the big REITs as well. So the list grows, and it's going to get bigger as we get to earnings season. Companies are going to simply withdraw their guidance, or in some cases, as the SEC has allowed them, they may not even file their 10-Qs. They've got a 45-day grace period if they fit certain criteria. I want to show you the S&P futures overnight because this is my main theme. The intraday volatility has been titanic, and it's not changing. We swung in a 100-point range overnight. This was before the open. That implies 4-5% move from high to low. Those are enormous numbers, and that's why we're getting these VIX numbers that are really through the roof. If you take a look at what's been going on for the week, and I'm just talking about closing prices this week, S&P on Monday, down 8.9%. Tuesday, up 9.8%. Wednesday, up 1.2%. That's a rare calm day. Thursday, up 5.7%. And these are not intraday swings. These are just the closing numbers. The intraday swings we are seeing are 5%, 6%, 7%. These are unprecedented numbers. So this is why the volatility levels are still elevated. If you look at the VIX on just what the volatility we've had for the month of March, not what we think it's going to be, but the VIX is 100 essentially. And it's implying these enormous swings in the future as well when you try to get the VIX, which tries to figure out 30 days out. Thursday, the intraday volatility was 5%. So people say to me, Bob, why's the VIX at 65, 66? There is no way in God's green earth that the VIX is going to go down when you're having intraday price swings in the S&P of 5%, 6%, 7% a day. That's the realized ones. Remember, the VIX is a guess. It's just a guess about what the volatility is going to look like 1 month from now. Traders look at what it's been like the last few weeks and they say, oh my heavens, this is likely to continue. That's why the VIX is at 66. And by the way, 66 is a real number. It measures something. It implies that they're estimating volatility swings of 4 to 5% in the S&P 500 for the next 30 calendar days. That's what an actual measurement of the VIX is telling you right now because they've been seeing it recently. So people say, what's it going to take? Somebody asked me yesterday to have the VIX in 40. I said, well, you're going to have to get at least the realized volatility that we've been seeing down in the 2% range, 3% range. It's got to get a lot lower before anybody starts letting the VIX drop dramatically. Here's your futures contracts, and you can see they're lower, but even further out, way into June, we're looking at numbers that are, in the high 30s, early 40s. That's a long way out, June. And still traders are still thinking it's going to be very volatile. Now, that'll drop if we get a string of days where there's 2% intraday swings on the S&P and it stays that way. Those numbers will drop. But right now, guys, I don't care what they tell you. There's no bottom in right now until we start seeing things calm down a little bit on an intraday basis.